Hi, this is Lara at Elliott Wave Stock Market with your weekly analysis for gold, done on Wednesday 27th of March. I'm recording this video now, 8 PM New York time on Wednesday the 27th of March, New York time. My last analysis of gold had expected price to move higher. It did move a little bit higher, but it fell well short of my target before turning downwards. That little bit of upwards movement did, however, complete the structure for the final C wave, and so it's most likely now that this correction is over and we've just started on the middle of a third wave downwards. I have two hourly wave counts for you today. The first one sees the start of minute or pink wave 3 here, and the alternate looks at the possibility that minute wave 2 could move further sideways as a double zigzag. I'll consider that alternate for two reasons. The first reason is if the second wave is over here, it's just at 0.382 Fibonacci ratio of the first wave, which is really shallow for a second wave. Secondly, also, because we don't have a clear 5 down yet on the hourly chart, so I can't confirm that the second wave correction is over. But if we are in the third wave of a third wave, a shallower second wave correction with a strong pull to the downside could explain the shallowness of the second wave. If it does continue further as a double zigzag, it can't move beyond the start of the first wave above 1696.26. The target for minor wave 3 is still at least a couple of weeks away. At 1488, it would reach 1.618, the length of minor wave 1. The target for intermediate wave 3 is still a few weeks away yet. At 1431, it would reach 2.618, the length of intermediate wave 1. And the long-term target for primary wave C to finally end, still months away. At 1398, it would reach equality in length with primary wave A. And cycle wave 4 can't move into cycle wave 1 price territory. The invalidation point will remain the same at 730.4. Let's have a look at the first hourly wave count. We're going to look at the end of this correction, just the very end of it, and the start of this downwards movement to see what's happened in the last few days. Where the high for minute wave 2 up here is this point up here. So we have upwards movement ending in a very slight truncation. To the downside so far, because this first wave here subdivides so nicely as a zigzag with a barrier triangle here in the middle of it, I expect that we're seeing a leading diagonal unfolding in a first wave position. So we have a zigzag for 1, a zigzag for 2, an impulse for 3, for a leading diagonal. The subwaves 2 and 4 must be zigzags, and the subwaves 1, 3 and 5 are usually zigzags, but sometimes they're impulses. And if one of them is going to be an impulse, it's usually the third wave. So the third wave over here, and a big wide zigzag for the fourth wave, which has overlapped into wave 1 price territory, as it should for a diagonal, but it can't move beyond the end of 2. If it moves any higher, it can't move above 1613.15. The third wave is longer than the first, and the fourth wave is longer than the second, so the diagonal is expanding. That means that we would expect the fifth wave to be at least as long as the third, if not longer. That gives us a target at 1584 or below. The fifth wave will be most likely to subdivide into a zigzag, but it could also be an impulse. When it's a completed zigzag, I'll expect the leading diagonal is over, the first wave is over, and following a leading diagonal in a first wave position, we expect a really deep second wave. So I'm expecting overall downwards movement, which must make a new low beyond the end of 3 down here, because a leading diagonal may not have a truncated fifth wave, to 1584 or below before we see a deep upwards correction. If price moves above 1613.15, invalidating the main hourly wave count, then I'll use this alternate. It's all the same to this point here, except I've moved everything within this ABC correction all down 1 degree. This alternate looks at the possibility that the second wave correction is going to be a double zigzag. So instead of this end up here being the end of the correction in its entirety, this is just the end of the first zigzag in a double. The double is joined by a 3 in the opposite direction, labelled X, and this is where the second zigzag may have begun, with a 5, 3 and a 5 up, probably yet to complete, probably not over here. The purpose of a double zigzag is to deepen a correction, and if the correction was over here, it's just at the 0.382 Fibonacci ratio. This is a second wave, so we'd expect it to be likely to reach up to 0.618 at 1646. So at 1638, sub-mini wet wave C would reach 2.618, the length of sub-mini wet wave A. So I don't think that the C wave is over here because a double zigzag would not have achieved its purpose. It would be likely to continue on higher. Within sub-mini wet wave C, microwave 2 can't move beyond the start of 1 below 1591.47. If we see price move below that point, then the main hourly wave count would be confirmed. So for gold, I'm expecting most likely that we're going to see downwards movement to a new low below the most recent low just a few days ago, and when that's done, to 1584 or below, we'll expect a deep upwards correction. That's all for me today with your gold analysis, and I hope that everyone's having a fabulous day.